startups or first-time founders just starting out their startup, when do you think they should and how should they approach an angel investing, and when should they maybe directly go into a VC? Give us some guidelines about who to approach and when.
So it's mainly about the level of product market fit you've validated. The earlier you have where you don't really have a product market fit, you might have just an idea, just some slides. That's when you mostly want to find people that'll gamble, that'll take larger risks. And today, mostly the people who will take larger risks are angel investors, and at some point, less professional angel investors. The ones that won't tell you, okay, I want you to run a campaign, I want you to give me 20 companies who have signed an LOI and stuff like that. People who really gamble on the idea. Now, having said that, I'm mainly concerning myself with first-time entrepreneurs. Second time, third time, I constantly hear about people who raised enormous amount of capital just from an idea, even without slides. But first-time investors, entrepreneurs who less have some credibility to their name, should aim to get some kind of initial product market fit and approach angel investors. Now, not all angel investors are the same in terms of not only what you get at the moment of investments, but also down the road. Getting money from, I don't know, Peter Thiel will give you much higher chances of raising round A, round B than getting funds from Yoav Amit or from any other no-name angel investor. Sometimes you don't have the privilege of choosing, but it's important to note that when looking for angel investors, you need to think about what kind of tag, what does it say to your company to have this angel investor investing in your company. I had friends who had to buy out their angel investors down the road because either they were an obstacle or their name was an obstacle. I had investments myself, which I declined on taking, looking at the other investors inside the company. Just because I knew that now, one of the things that have changed during my angel investment period is that now I'm more involved. In the beginning, it was just take my money and I don't want to be involved, but having invested in some companies and knowing that they took some wrong paths, which I could stop if I was more involved. And today, one of my conditions is that I'm involved. And knowing that if there's a different angel investor who I won't say disrespect, but who I don't know or don't vouch for their opinion, and having to constantly not say fight, but constantly debate ideas and processes with someone I don't respect, it's not worth the hassle. So having a good name angel investor is important, but of course it's a privilege. Not everybody can have it. So before you have a good product market fit, mostly angels. Once you have a sign of product market fit, which could be in a B2B world, a few companies who have actually signed a contract saying that they're about to pay you in March $10,000 a month, and having you promise them that the product is already ready, here's screenshots, and now you have like 6 months to push it. Or in the world of B2C, having a fake website and seeing that traffic is coming in. At the moment you have an initial product market fit, it's a good time to go to either micro VCs or even larger VCs if the market allows it. A lot of VCs like to invest early stage for the ability to actually invest later stage. They don't care about giving you now $1.5 million to gamble with, knowing that they'll be the first to invest in a round A with $20 million or something like that. So a lot of VCs do like to invest early stage just to have the option, and if you have a good product market fit validation, it's a good time to go there.